What's up, everybody? Chris over here, founder of Pollinate Trading. And in our weekly market overview, it seems people are really starting to enjoy the video, even though I have been doing the weekly email for over a year now. A lot of people have been saying they've enjoyed the video. So let me know what you think in the comments, or get at me if you want the written version too. This has been quite enjoyable for me. You can sign up for the more than weekly email at pollinatetrading.com/subscribe. I cover everything in between the weeks and randomly as the market bottoms, market tops, market goes crazy. When there's opportunities, I send emails out to all subscribers. It's free. So without further ado, let's get into this week's with the market. Where is it at? And there we go. Okay, so sorry, it took a minute there, folks. So let's have a look at Nasdaq. Notice I've cleaned everything off this week. We finished our campaign. We got long over here and added it the whole way up. Took profits for a good portion of it up here, and then relaunched rolled the contracts over, the remaining contracts over to December expiration. And then we just got stopped out last week. So we're able to lock in some decent profits from the long campaign down at the 14,000 level or so, getting out at about 15.5, a little less than 15.5, 15.4 or so. And then gave back a little bit of that by lightening our position and kind of dealing with it. Now, last week we were here, so this position right here, and this looked like a fantastic bottom. I didn't get into it. I didn't jump into anything else last week, or the week prior, I should say, because I just didn't think it was done. I couldn't really put a quantitative reason on it, but I was cool to be light-handed and let it play out. For whatever reason, that was the move, because we did take another leg down last week to finish the month negative. Let's have a look at that monthly candle. As you can see, that's the first month in 1, 2, 3. Well, everybody keeps saying maybe it's NDX. Everybody was saying it's 7 straight up months. I don't see it. Doesn't look like 7 to me. That looks like a down month. Okay, well, everybody who's been talking about the 7 months of 7 consecutive months higher, yeah, you were wrong. So that would be Al Brooks, my boy Alex. I don't know what you guys are looking at, but it seems like that was 3 months straight, 1 month off, 1, 2, 3, 4, 5, and 6 prior to that. Not sure what I'm missing on this, but that looks like a down month a few months ago. So just goes to show. I was sitting here reading about it this morning, Sunday morning on the couch, and everybody was talking about 7 months straight up, and we couldn't do 8. And then I pull up the chart and there it is. So I don't know what it is that they were looking at. From my world, that doesn't look like 8. Anyway, love you all. You guys are the best. But I'm not sure why that happened. Okay, let's get to more important things. What didn't happen? The dip did not get bought. Now, last week's video, I called buy the BTFD, QQQ, Apple, all that. And if you watch the video, it's probably more of a clickbaity thing than anything. It's saying, okay, we need to figure out when we can buy the dip. I don't know. We're not there yet. That's a decent little looking bottom type scenario. So I am looking, and we are in the in the bull quiet market regime. So this is where we would expect buying to happen. But I don't have any. I'm not rushing out to get long here just yet. I will continue to play around on the daily and kind of like see where it goes before I start another nice long campaign in the Nasdaq. But for now, we have a pile of cash, and we're looking to get further back into those positions. Let me have a look at Russell, which is a little bit more interesting to me. So Russell is in the neutral market regime. And as you can see, it's just been going around sideways. So we can almost see there is a, we can get a little bit more narrow with our thing. You'll notice that actually it's a little bit better to see this instead of, you start to see how the volatility is narrowing as we get towards the end. That's pretty common before you have a breakout. The breakout in and of itself doesn't mean that, about 80% of breakouts fail. So it doesn't mean that we are off to the races if it does happen. But what it does mean that if it does break out, then probably things are going to start kicking up soon. Keeping an eye on the Russell. I prefer to have horizontal lines as break areas than diagonal lines, because they tend to be a little bit more or a little less subjective, whereas a whole price level breaks through, whereas a line is sometimes a little more imaginary. So keeping an eye on Russell, keeping an eye on Nasdaq. But with that picture in mind, look at Netflix. You see how Netflix had that sideways range for almost a year now? Well, this is what a breakout and retest looks like. We broke out of that range, we come back and we test it, and then we've moved out of it. Okay. So this is what a breakout looks like. And this typically leads to a price move. You could say a measured move. So 570, we'll say 575 down to a low of, so 125 points, 120 point difference, 125, let's call it. So that would be $700 price target on Netflix in order to hit the measured move from there. However, it is a high base breakout. So we do tend to find that they go 2 times that risk. So 250 above 580 is 780, 830. We start looking at as another potential price on Netflix. So Netflix has broken out. We'd be looking for some cheaper calls. 830 price target. Whoops, that is here. So 2R is 830 price target. The 700 level would be the the 1R price target from here. R is the measurement of the height of the low, your risk, with a stop down below here. So what we'll be looking for in the trading lab is over the next however long it takes to find some cheaper option-based positions. You can always just go by the stock and not have to worry about the option premiums deteriorating. But we can see that 700, it's not too far away, really. It's really not that far of a move. And yeah, relatively speaking, that tight volatility compared to everything that it's done is pretty easy to see. We're back into the SQN bullish. We break out. Now, one thing I like to point out is, probably see it better on the weekly here, is you can see when a breakout happens, you break out of that range. Now, a lot of people see, oh, if this thing breaks out of whatever, 580, it's off to the races. A lot of people say that, but that's not usually how these things work. Usually they suck people in, all the bulls jump in, bears stop themselves out. That's one of the reasons that these happen, is bears have a bunch of stops above the previous swing high. So price gets like a magnet to it and then dips. And so you have this big price swing, you have this double top looking formation, And so you bring fresh bears back in and everybody's excited. Now, when typically you get a breakout, you get a retest of that breakout. So you want to come back down. And if you can get positive follow through, which is goes down and then closes back above the breakout level or near the breakout level, that's fairly bullish. This isn't a precise attack, but this is exactly how I would be. I am looking at trading Netflix up to the 800-ish, low 830 level. What I'd be looking for is time duration in options that are going to allow me to get to that time, that 800 level, 830 level, as well as cheap enough that I don't throw away my entire risk. So we'll be looking at that in the lab this week. If you're not a member of the lab, do sign up. We trade live futures, options, Forex, and crypto every single day. We go live every single day as well. And the one I've been talking about for the last couple of weeks is finding a bottom to get long on Apple. And we potentially did, as you see it, where remember what we talked about, a breakout, blasts off, comes back and tests, and then takes off again. Well, this is just a longer duration of that. This took from almost a year, from July to October now that we've done that. And it see how it broke out of that range and then dumped instead of what I was talking about is you get that breakout, the test, and then so you get your breakout, your test. This happened here and it failed. So in all my trading, what I'm looking for is I put these tests on the market. So I test if the market passes the test. In this case, had it turned around and gone higher from here, that would have been a passing with an A grade of the test and taken off. But it failed. It's either pass fail. I guess I don't need to give it an A or a B or a C. It's binary. So it's either a pass, which it would have taken off again, and it did not do. And so it failed. And now it's back to a different test. Let's take a look at the week here. You can see the breakout, boom, and then it comes back down. On the bigger time frame, it is now retesting. So I can take this one out and see breakout, pullback. Now, if we can get going, then we can get a full move higher. Let's take a look at what the measured move would be. So that would be 157 down to 140. So 1734 points above 191 price target, give or take, right up in here would be 2R of this range. So a price target right up here around the 190 area is what we'd be looking at, which now you have the $200 big round number as a magnet for it. And as you can see, they tend to like doing things around big round numbers because that one really opened at 93 and closed at 106 that week. So it was very happy to get above that $100 price level. Understand that so much of the world holds Apple as like the non-skilled investors hold Apple. And so no offense to the non-skilled investors, not saying that, I'm any better. I'm just saying that a lot of people will say, I'm going to hold this. And if I'll sell some at 200, I'm going to take profits. So that's why these big round numbers are volatile. And a lot of firms will, or, even Apple themselves will use the opportunity of hitting, you can see it did hit 100 the week prior, or almost 99.96, almost hit 100 and sold off. So what happens is you have a bunch of, like, obviously Apple buys their shares back. You have a lot of hedge funds, a lot of businesses that like profitable businesses, and they like to buy whenever they get a chance. And so if a lot of people are selling, they'll come in and use that selling as an opportunity to get further along or more longer. And so probably a similar situation in Apple at 200. So that 191 price target might just be kind of a bump on the road. Okay. kind of crossing off everything that I was looking at going into this week. And let's have a look. What I'm really interested in these days is commodities. I'm sure if you haven't, I've been getting a lot of people from not the financial world, from my old government life and other places telling me to make sure I'm stockpiling. We don't have inventory. Make sure you got enough water. Make sure you got enough food. Make sure you have blah, 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 blah. I do. Hopefully, I'm thankful that we do. But the commodity market has really just blasted off in the last year, a doubling. That's the commodity. Basically, in 2020, I was trading at $10. We're trading at 20 right now, and it's gone almost straight up. Now, I wanted to show the more harder commodities, and you can probably see natty gas has done incredible this past few weeks. It's probably even better to see how volatile it is on a daily basis. I mean, when we first started getting into this at 290, this thing is trading, got up to over 6 this past week. It was up 12% on Monday, and then down 6, up 9, down 7. So much volatility going on there. And we're seeing a lot of a lot going on in the commodity index, right? It's spent a good amount. It was trucking right along into March and then pulled back, trucking right along, and then it has spent a good part from May, basically the entire summer, just banging around sideways in this high base range. Well, the past week or two, it's broken out of it. And you see there's our breakout, our pullback, retest, and then we're off to the races. Why is that relevant? Well, we are setting up really nicely on DBA. I'll take this trend line out. I was just using that as a guardrail. But what we can see on DBA, so this is the ags. These are the ags. So let's take a look at what we have on what the holdings are in DBA, because it is interesting. Short-term government agency, 24% of its position is in institutional bonds. But coffee, corn, sugar, soybeans, T-bills, okay, you saw the rates going up this week, so that makes sense too. Treasury ETFs, cattle, and hogs. So why is that important? Let's take a look at coffee. Coffee looks the same. What's the next one in? Corn. So corn is the underperformer of that group. If corn starts to kick up, which it is looking like it's going to start doing, corn has put in quite a move last year, has pulled back and just gone sideways quite a bit, has spent a good time attempting to do the old head and shoulders, shoulder, head. And if it breaks back up, we could have a failed head and shoulders and be off to the races. I'm liking corn as an opportunity. So what does that mean? DBA would be a further beneficiary of that. Sugar, number 11. Same. You can easily see the same pattern as you have in DBA. See that high move up, boom, pretty much since last year. Lots of inflation going on there. Let me pull the DBA. You can see same sort of thing, just a little bit longer. We saw it with coffee, same sort of thing. Just in fact, coffee's got room to run, quite a bit room to run. So we are actually tracking coffee as a swing trade. Definitely keeping in that bull quiet. The thing it's different, you trade these differently, futures differently. Soybeans. Now, if we can get soy, now soy is not looking that good, and that's going to be a bit of a drain. right? We have 6.66%. Oh, sure. Of course, it's 666. You know, a tiny portion, 1/6, or not 1/6, is about 1/20th, a little less than 1/20th of the entire fund is in soybeans. Nothing too exciting about that. That's a November 21 contract. But you can see that's just been straight down. So you can see why the pull down and up has been happening on DBA. CTL is just 5% CLTO. Let's see if that's Treasury Collateral ETF. Yeah, same. That's put your money here and hopefully it'll stay the same price, which basically it does. You know, it's from 106 to 105, hasn't really moved much. I don't know if AGPXX will show up. Yeah, it doesn't show up. So we can see we have that same pattern, right? So what we would expect, a breakout higher, a pull back in to test it, and then off to the races. DBC seems to have has already done that a few weeks ahead of it. Its sideways market was a little bit stronger than DBA's. DBA's is the trade I'm in, and we'll be looking to potentially add to over the next few months. Nope, BTC USD. Let's get to it. Right now, currently, I'm going to bring this one up. Our boy Peter Brandt, yeah, that's fine. Peter Brandt had the old Head and Shoulders, and you know, of the people that do classical charting, he's probably done the best. So Head, Shoulders, neckline breakdown failed. So this failed to break down. It's probably, if we were to look on it, maybe a weekly, we see a little bit easier. Yeah. And so what you can see is that the shoulder, I guess, failed. Boom, it should have dropped. It didn't. It's reversed right away. And so last week's sell-off got caught. This week, we're going to close the week. So far, we've only got a few more hours to close the day. They're really pushing crypto at the moment to close the week strong. Who knows what it's going to do? You know, the day-to-day and the week-to-week of crypto is dramatic and exciting. And for me, it's just a position that I've been sitting on for well over a year. And to a further extent since probably 2015. But a large, we moved into a large exposure into crypto back in September of 2020, September, October timeframe. Catching quite a big move from Bitcoin, Ethereum to many of the others. We still have a good amount of distance to go in crypto, and we have our plan, we have our metrics in place to know when to get out, and then in the following year, 2-3 years after that, when to start coming back in with more. So we're not just perma bulls long the entire time, but when you get down in this area over here, this move doesn't really bother you. This move from 50 down to 30 doesn't really bother you. And to an even better extent, back into the 2013, 2014, 2015 timeframe. Really, the summer of 2016 into early 2017 is when the majority of the fund really, or the core positions was taken. This sort of stuff just means nothing. So you get worried about that here if you bought here. Even in our group every day, I'm seeing a lot of people who are worried that they think that's the top. That this was the actual top in crypto. They think we're done. I do not. I still maintain that we have at least 5x to go on Bitcoin, at least 5x on Ethereum, and quite a bit more on a number of alts that we will be focusing on a little bit later on. Again, in the trading lab, we focus heavily on these, and the day-to-day is fun to get lost in, but it really doesn't it doesn't have a lot of opportunity. The real power moves are where the opportunities lie. You know, I'm always asked, you know, where my stop is, and I don't have stops in crypto. I make the big moves, and I sit through them a lot longer. I sit through these for years, and then lighten up or go exclusively to cash and then wait. And we do have a full mapped out plan of when we are going to start taking profits, and when we're going to roll into different assets, and what we're going to do, and then what we're going to do in the ensuing months, days, years, whatever, in between the next opportunity to get long. If you're not already long the crypto markets, you're probably not going to worry if you paid at 48,000 or 35,000 when this thing's trading at multiple six figures. When you're looking at 100,000, 200,000, 300,000 even. That little $10,000, $15,000 difference isn't that important to you. So, and one thing I just want to point out, you can buy whatever amount of crypto you want. You don't have to buy one Bitcoin. You don't have to buy one Ethereum. You can buy $3,000 or $2,500 or $2 worth of the asset. Just for those of you who've made it this far through the video and don't really know that, and think you've missed the Bitcoin run because you can't afford a single coin. Just want you to know that that's not really the case. Ethereum, same, looking great. We've got a long ways to go. Solana is the other one that I have a lot of holdings in. So Bitcoin, Ethereum, and Solana. Solana looking great, really. That's that. I don't know. I'll call that a pullback. Boy, that's off and running again. Last week, the high of 153, currently trading at 175. Pretty 30% up move in about a week. That's pretty exciting considering we have 13% in Bitcoin. So pretty exciting there. This week, I'm looking for opportunities in Apple. I'll be looking to buy Apple via the calls, right? Be looking to buy Apple somewhere around in here. If it's so far it's holding this, that doesn't mean I am buying Apple this week. Doesn't mean I'm buying Netflix. Doesn't mean anything. I'm just looking for the opportunity. Again, in the trading lab is where the decisions are made and all the trades are shared. So, if you follow up next week and you're saying, what did you get filled at? Or, are you guys in? We may not be in still. These bottoms can take a long time. Look how long this one took. Couple of weeks to form there, couple weeks to form there. We can bang around in here for a year before we get a good trade set up on Apple. Who knows? What I do know is this one has broken out. Netflix has broken out and retested, and it's back off and running. So we should expect some pretty good moves on Netflix, and anticipating a breakout pullback follow through on the ags. All right, that's all I have this week. Again, pollinatedtrading.com/subscribe. It's free, and I hope you all have a wonderful weekend, a wonderful trading week. I think everything is ready to go, and I look forward to chatting with you. Comments down below if you have any questions on anything, you want me to take a look at some sort of stuff. DM me at Chris Geniusly or Chris D Macro on Twitter, and of course you can always reply to the email if you're subscribed. Have a wonderful day, guys.